Hi, welcome to Search for Yields, the fortnightly newsletter from INR Bonds. I'm Arjun Patsati. And first of all, let me wish you all a very happy Dashara and a very happy festive season ahead as well. So Search for Yields, in this edition of Search for Yields, we are actually talking about the fact that lenders are really rocking it. The second half of this financial year, there is some of the results coming out from the large banks, ICICI Bank and others. Some of the largest finance companies, including Bajaj Finance and the microfinance sector, all of them are really showing very, very strong results. The growth has been excellent. The quality of assets is very strong. Uh, their margins are very stable to even higher for many of them. And the guidance has been very positive. And most of the results that have come out, the management has guided for a very strong period of growth in the next 2 to 3 years. And that is actually lending a lot of confidence to bond investors. Given that the biggest borrowers in the financial system, apart from the government and the public sectors, are the finance sector. And a strong finance sector can actually give a huge amount of liquidity boost to the bond markets because as they grow, they would need to fund their growth. They have to borrow. That means they have to increase their liabilities. And given that they're going to borrow more, they need to have a very strong liquid bond market. And given that the strength of borrowing is given that the strength of the fundamentals are good, then there will be more appetite by investors from both domestic and global investors to invest in the Indian lenders. So what does this mean for the bond investors in India, financial advisors, wealth managers, who are looking for fixed income options for their clients? I'm Arjun Patsati, and I'm going to talk to you about what it means for bond investors when the lenders are rocking it, if you really want to put it in perspective. And if you're a financial advisor, obviously the best place for you is INR Bonds Partner Portal. See the best bonds available, most information, transparency, up-to-date information availability, and the best of prices, easiest and best of price discoveries, and the easiest of investment processes, all through the clearinghouse of exchange and through a regulated platform, giving investors and advisors a huge amount of confidence on the investment process itself, as well as on the investment they are doing for their clients. And we also have an app, QuickInvest by INR Bonds, for a curated list of bonds, again giving you the best of information, price discovery, and the easiest of in-app investment processes. So log into Partner Portal if INR Bonds partners, if you're a financial advisor or a wealth manager, or if you're an investor or a financial advisor and wealth manager, you can also download our app to select the best bonds which giving you a curated list of bonds from the whole of aggregation that we have. Back to the search for yields. Now, search for yields is very, very strong at this point of time. There is a lot of angst in the markets, especially in the treasury markets. Now, US treasury yields have crossed 5%. The Indian government bond 10-year GSEC yield has backed up to 7.4%. It had gone down all the way to 7%. So a lot of volatility in the GSEC and global bond space. Having said that, and short-term costs are still high, RBI has clearly said that they're going to keep money tight. And if they're going to keep money tight, they want to make sure that the money is expensive as well at the short end. So with this, the short-term rates are also high, and investors are searching for where they can make the best out of it without seeing too much of volatility. Now, given that the lenders are doing so well, and they're guiding for very strong growth ahead, at least for the next 2 to 3 years. We are going to see some lot of M&As happening. Many of them will come out with more equity issues, so improving the capital adequacy so that they can grow more, and also that their asset quality are going to be stable to better. So given this, some of the best investments can be found in the 2 to 3 year kind of a lender space. Obviously, the banks will be the most expensive in terms of lending to them, as in buying the bonds, investing in the bonds. So banks will be anywhere between 7.5% to 8% maximum. Whereas if you go lower down, some of the very strong lenders, including Bajaj Finance and Chola and others, you can get them a Tata Capital. You can all get them all in a level of around 8% and slight higher, 8 to 8.5%. But if you're looking at higher yields, there are some very strong lenders with showing very strong um, traction in fundamentals. Again, taking advantage of the huge growth in lending in India, and also the fact that for the next 2 to 3 years, the whole space is looking very strong. And some of these lenders are in a range, giving in a range of 9 to even 11.5 to 12%, depending on the risk appetite of the client, of the investors. And all these come in a 2 to 3 year kind of a maturity bucket. And given that guidance for the next 2 to 3 years has been very strong, the risk of investors is obviously, at least if you go by guidance, it's reduced. Obviously, investors and advisors will have to do their own due diligence. And for their own due diligence, platforms like INR Bonds give them all the information that they need to do that due diligence. So once they do that, and then they have a risk return profile of the clients mapped, then they can easily construct portfolios which can yield in a 2 to 3 year average maturity portfolio, yielding, depending on the risk profile of the client, anywhere between 8.5% to even 10 to 10.5%. And these portfolios can be diversified across lending sectors and maybe some other bonds as well, which could come in these kind of ranges. And even now with the face value of bonds being reduced to 1 lakh, and a lot of public debt issues happening, where the minimum investment size is only 10,000 rupees. Portfolios can be constructed for even as low as 4 to 5 lakhs with 3 to 5 bonds as well, and higher. So just check into INR Bonds QuickInvest, where if you just log in and register yourself, you can see what kind of portfolios can be created for your clients. Or if you're an investor, you can create your own portfolio through our app. Closing this out, happy Dashra to everyone. And yes, look forward to many of you coming back to INR Bonds and checking out all the bonds and what portfolios can be created, and the fact that the outlook for lenders is very strong, and bond investors can take advantage of this outlook for their own investments.